All right, good afternoon, everyone. I'm very happy and very proud to share with you a really good lineup of speakers for today's class. And there's a lot of stuff that we're going to cover. And in real estate, we have so much to learn, especially learning from other industries and other people who are going to be very helpful to our business and helpful to our clients. So I wanted to put together a nice little package and I'm very happy and impressed for Rick Sanchez with Guaranteed Rate over here. Rick Sanchez is a mortgage broker. He knows his stuff. He definitely knows how to help clients in getting the mortgage and giving them the proper consultation. And he specializes and focuses with realtors, with business owners, some of the people who are a little bit more challenging on and really need some creative ideas on how to get their financing approved. He gives great consultations. So I'll allow Rick, who put together this all-star panel together. We appreciate having him and all of them as guests and with the company and for sharing. So Rick, why don't you go ahead and share a little bit about yourself and talk to the camera. We appreciate you on Zoom. And yeah.
Sounds good. Good afternoon, everyone. First of all, wanted to thank you guys for attending, both in person and in Zoom. I know how all busy you can get, especially in this type of market where you really want to be out there and do a lot of sales activities. So we appreciate you being here. For those on Zoom, there was food here. We wish you had been here for that. My name's Rick Sanchez. I'm a loan officer with Guaranteed Rate, so residential lending. I've been fortunate enough to be a top producer over the last few years. I've funded over $500 million in mortgages. I'm ranked in the top 1% of originators in the country. But I got to tell you that it wasn't easy. It was not an easy thing for me to accomplish. I went through a lot of mistakes, a lot of stress, a lot of struggle. Ultimately, my business changed when I created a system that I followed every single time, right? A process. And one of our main core values is communication, making sure that the buyer, that our referral sources know what to expect from the very beginning and to stay in touch throughout the process. So that has been it. Now, I used to work for a big bank, and where I was working, I was doing a lot of loans for business owners, for real estate investors. And as the mortgage rules changed, I was saying no at least half of the time, as far as I couldn't get the loan approved, I couldn't get the deal done. And just being honest, that was really affecting me as a person, because my nature is to be a helpful person. As a Hispanic in our family, right? We care about family, we care about helping people. And I just didn't feel like I was being helpful to others. So that's why I decided to make a change and I came to Guaranteed Rate. The reason why is because now I have over 40 different lenders where I can place a loan. So 90% of the time I am saying, yes, I do have a solution I can help. That's why my team and I, we specialize in working with business owners, people who are self-employed. We work with real estate investors, right? Anyone that has rental properties, wants to buy more properties, and we work with foreign nationals. That group of people, they have the hardest time when it comes to a mortgage loan, right? There's a lot of paperwork. They're frustrated. The process is just not efficient. And I believe that when you buy a house, it's not just about finding the house and working with a good realtor, but the mortgage process will also affect how they felt about the whole thing, right? About the whole thing about buying a house. So what we care about is that we provide a good service on the mortgage side. So overall, it was a good process. And then they would be happy to refer you, right, to a friend, to a family member. And that's why one of the things that we do at Guaranteed Rate is offer 100% satisfaction guarantee. What that means is that if for any reason your buyer is not happy with our process, we will refund the application. Okay, so no questions asked. Is either were you happy or were you not, and we'll refund that. So that's about me. Very quickly, I'll give you a program that has existed for many years, but because of the rates being so low, we forgot about, and it's the buy down program. So for those that are here, it'll be on the second page. And essentially what it is, it's a 30-year fixed rate mortgage, regular traditional mortgage loan. You can do as little as 3 to 5% down, right? So just a regular mortgage. You get the best 30-year rate that we have available. But the first year, your rate will actually be 2% lower, meaning your monthly payment is lower. The second year, it'll be 1% lower. And then the third year, it just converts to whatever rate, the fixed rate that you got from the very beginning. So if you look at an example that we have here, we use 5.875. At that time, that was the rate, the national average, but it's whatever best rate is available. The reason why this is important is because we know that right now buyers, they know they want to buy, but some of them feel like they missed the opportunity for low rates, and maybe that is holding them back. Another thing that we know, and I've been on the calls with Calvin, we know that the high rates right now will come back down eventually once inflation is back in line. Our projection is that it'll be 2 years, no more than 2 years. So why not help your buyer the first year have a low rate, second year a little bit higher, but by the third, the probability is that they will refinance. But let's say worst case scenario, they don't, they still have a fixed rate, the best rate that they can get today. So it's a safe product. With that, I'll just let you guys know what we have here is some great speakers. What I wanted to do is bring some speakers to you guys that will help you personally, not only with your own finances, but also to generate more business, have more tools in your box. When you go out there and you talk to a listing opportunity, if they have objections, maybe how you can view them on a tax perspective. And then Colleen is a professional organizer. I'm thinking outside the box here. When you go for a listing, and maybe some people say, I can't imagine moving out, what a mess it will be, right? Don't let that be an objection that you can't overcome. Colleen will be here for that. So with that, I'll introduce Andrew.
Yeah, thanks everybody for having us. Really appreciate the opportunity to be here. My name is Andrew Mancuso. I'm a tax professional and certified financial planner. I have a practice out in Torrance, so just a little ways up the road. When Rick asked me to come here and speak to you today, I was really honored. I'm always happy to get in front of people and see if I can help somebody in some way. But the major things I want to touch with you all today are, number one, figuring out how to make you more money. And if that's through organizing yourselves as business owners more efficiently, or helping you overcome objections or with your clients as to reasons why they don't want to list their property, or reasons why they're not ready to buy something, to kind of come up with good concrete solutions for them, so that they can make a great financial decision for themselves and for their family. And so I'll start with you guys, top of the house, right? As 1099 business owners, it's both a fantastic way to earn money. It's also a very complicated way to earn money, right? If you receive a 1099, it's fantastic because you control the way that you operate your business. You control everything about your schedule. You go out there and make it happen for yourself, right? No one's telling you how to do that. You gotta get out and figure it out yourself. You can take advantage of a lot of rules in the tax code that will help you to keep as much of that money that you're generating as you can. Any expenses that you incur throughout your journey of earning your income, you can use to offset your income and come up with a much lower net income. You can set up retirement plans for yourself, SEP IRAs, solo 401ks, ways to reduce your top line deductions even further to help keep as much of that money as you possibly can. What makes 1099 income very complicated is that if it's mistreated, if you don't pay attention to it or plan with regard to your 1099 income correctly, it can be very painful. Not only do you have to pay federal and state income tax on the money that you earn, but you also have to pay self-employment tax, which is 15.3%, which is the both employer and employee portion of your self-employment tax. So how do we overcome that? There's ways that we can go about it. It just takes a little bit of pre-planning to be able to put yourself in the best financial position possible. One really strong way that we do that with other realtors is helping them to explore the idea of establishing an S corporation. And the huge benefit there, and I could say a lot about this, but I'll try to be brief. But with an S corporation, if you earn, let's say, $100,000 of net income, with an S corporation, if you have an S corporation established, you're now an employee of your S corporation. So in that $100,000 example, you can set yourself up as an employee where you're paying yourself a salary. So let's say in this example, you pay yourself a salary of $35,000 a year, right? So that leaves $35,000 that comes to you as a W-2 employee of your own S corporation. The other $65,000 that you earned of that $100,000 then gets paid to you as a dividend, which of course is still subject to state and federal income taxes, but you avoid paying the self-employment taxes in that portion. So in this example, you'd save around $9,000 in taxes, which you could then roll into, funding your kids' education expenses, pay for more advertising for your business. I'm sure you could think of a million examples of what you could do with an extra $9,000.
See $9,000 on the W-2 side, because the W-2 is not.
Of the self-employment taxes. So the way I arrived at that number is from the money you've received as a dividend, that $65,000, you wouldn't pay the 15.3% of taxes on that $65,000. You can still pay income tax, of course, but yeah, it's a huge tax savings for yourself. But that, I'll put an asterisk on that because everybody's situation is a little bit different. That doesn't take into account that, you may have personal deductions to help offset some of that below the line. You may have tax credits that can help offset some of that. So that's why it just takes careful consideration and some serious financial planning for everybody individually to figure out what might be the best avenue for you. So that's just, some thought. It's just to say, before the year ends, sit down with us and our team or your own tax accountant or financial planner and come up with a plan to help make sure that you are running your businesses as efficiently as you possibly can. And so with that, I'll say this is that, you guys have a very important job. People going out there and selling their homes or buying homes, it's extremely emotionally charged. It's a stressful situation. People put their trust and faith in you as real estate professionals to help guide them, to be their real estate Sherpa, to help them, get to where they want to go. And with that, it takes you being knowledgeable and confident to help them through that kind of very difficult time. I just recently bought a property in Big Bear. It was a 30-day escrow turned into, I think, like almost a 90-day escrow. So it's just a really challenging process to go through. But having someone there who can help you to answer questions is going to be a really important tool. And so with that, if you guys have anyone who's interested in, say, selling a property, but they're not quite sure, they're on the fence, they have questions about, well, what will the tax considerations be? What will my depreciation recapture look like? What's my cost basis? Those are questions that you could bring to us, and we could help you on a case-by-case basis. Sit down with your client and say, like, okay, here are the facts. This is before you make this big financial decision. This is the end result. Does it still make sense for you? And that knowledge in and of itself might be enough to get them to be like, okay, yeah, that makes sense. Or maybe they just don't know. Like maybe they have no idea that there's a capital gain exemption for their individual property should they have lived there for 2 years. Or maybe they don't know that even if they haven't lived there for 2 years, that still may be possible to use a prorated version of that capital gain exemption. Quick example on that. I have a client in San Diego right now. She's a single taxpayer. She lives in this 2-story house. but has a lot of serious medical conditions. So she's owned this house for a year, and she has to get into a one-story house because this house is, 2 stairs. She's just having so much trouble. So she came to me thinking that, I'm gonna just stick it out for another year so I can get my capital gain exemption of $250,000 and not pay any taxes on the transaction of selling this house. Well, because she has medical conditions, she can cash in on a special exemption where the IRS will allow you to prorate the amount of capital gain exemption that you qualify for. So she's going to be able to take 50% of her capital gain exemption since she's lived there 50% of the 2-year period required. So she'll get $125,000 that she can exclude from her capital gains in selling the property early. So just an example, right? Just things that, if you have clients with questions, call us and we can work through it together to kind of try to help solve that for your client to get them to confidently move forward and make that decision to either buy or sell a property.
And I think that's important, right? Because sometimes people think because they've always heard something that is the only way that it can be done, right? So you have to live there for 2 years in order to potentially avoid paying taxes. But what we're saying is, well, maybe, why don't we ask everyone that we know, your trusted advisor, your accountant, right? Calvin, of course, and see if there's a solution for your client, right? I think that's what sets you apart as a great agent, is that you're willing to ask questions to every single professional that you know to help your client, right? This was a good example. When he told me, I had no idea. I thought you have to wait 2 years. And for this special circumstance, you don't.
Yeah. So anyway, so I'll leave it at that. I just want to make sure that we're putting ourselves out there as a resource to you. So if you have questions about your own business or the structure of your own business, or dealing with a complicated real estate transaction, that you've got people that you can lean on to help you. We'll leave our business cards here so we can be easily contacted. But with that, I wanted to take a moment to introduce my partner, Andre Ramirez. He's a financial advisor. We've worked together for a very long time. So I wanted to give you some information from a tax perspective, but certainly there's a lot of financial planning considerations that clients need to take into consideration when making these major financial transactions. So with that, I'll let Andre kind of get into some financial planning tools that you can use.
Awesome. Thanks, Andrew. And thank you again, everyone, for the time. Yeah, I think when we were kind of putting this together, we were thinking we wanted to look at it from 3 perspectives, right? You guys as realtors, of course, as sellers, and then kind of what I wanted to key in on was as buyers, right? As Rick mentioned, I think this is a perfect complement for Rick's loan program, right? It's figuring out, I think one thing we found, we all work together at a bank too, is kind of figuring out how we can help clients get into the house, right? Get them a mortgage, get them, us as financial advisors. I think often it's kind of overlooked because obviously it's the opposite, right? It's taking money from what maybe we have managed for them, but we should all still be involved with each other, right? And I think for my big point, overarching point is down payment money, right? I think a lot of us, and I just will use me as an example, right? Is when I was saving for a house, it's all I thought about was the money that was in my bank account, right? That's kind of the most natural, easiest place to go to is, hey, what do you have in your bank account? What's in your savings account? That's obviously your down payment money, right? But I actually believe it was Rick who kind of helped me, but was thinking okay, well, what else do you have, right? Let's look at your financial statement. Do you have IRAs? Do you have 401k plans? Do you have all this access to other liquidity that you might have not even thought about, right? And so that's kind of what I wanted to touch on a little bit. Sorry if this is a little bit redundant, but I think it's a really good reminder to look at, hey, you know what? If I'm a buyer in this market and I think, gosh, I got to save another 20 grand or $25,000, right? That's going to put me in another year or 2 out. Rents are increasing and it's not going to be a favorable position for us as buyers, right? But if you look at it again, so one thing I'll kind of point out is 401ks, right? So if you have clients that are buyers, right, and they are currently working for, let's just say, again, just for conversation purposes, a bank, big bank, W-2 employee, right? Well, they might have a good 401k that they've worked out for a long time. Well, you can access a 401k loan. Typically, you can borrow up to half half of the value up to $50,000. So the nice thing about that is it is a loan, obviously, right? So that kind of sounds scary for buyers, but you're paying yourself back, right? The money that you pay every month to pay off this loan, typically it's a 5-year term, right? So I always tell people, I would only encourage it for clients that think that they're going to be at their company for a long time, right? If it's someone that maybe like us, that we're like, hey, a couple years, and we're going to go find the next bank that's going to pay us, or, you know, it's a good deal for us, or whatever the case may be. But if it's a client that's got a pretty steady job that they think they're going to be at for a long time, it's absolutely worth looking at, right? Again, it's finding dollars to get you over the hump. If it's a $25,000 401k loan from them that they think that they'll be at the place for a long time. And the 5 years is important because if we think they'll be there for a long time, then it's enough time for them to pay themselves back through the 401k loan. Otherwise, it can create some kind of tax implications. So let's say, for example, the client thinks, okay, in 3 years I'll leave, or, you know, they leave after 3 years, it could create some tax implications. So that's why we want to be sure that, hey, you know, here's what can happen in case you find a better offer somewhere else. And it could be good for them, but there are implications involved, you know, if you leave prior to maybe paying the loan back. Obviously, that's a kind of a tax question and things that we have to sit on and consider. But, you know, that's a place I think a lot of people don't look for. And again, it's your retirement dollars. So we certainly don't encourage, hey, you know, draining that. But I think the IRS and the government does a good job of kind of putting a governor on that, right? Like you can't borrow more than 50% of the value. There's kind of built-in things. And again, you're borrowing from yourself, which I think as a consumer is really powerful, right? Because that's how banks make money, right? They lend at a lower rate and charge at a higher rate. So I think kind of becoming your own bank is extremely powerful as a consumer. So that's kind of the first place I think I would look. Second, and again, this kind of involves looking at like a financial statement is, okay, do you have life insurance? Do you have cash value permanent life insurance that you could borrow from? So again, it's kind of works the same way. You can borrow as a loan through your policy to come up with more dollars just in case you kind of need it. Again, it's not the whole down payment, but what if it's that difference they need to get them in the home today? And that's kind of what I think is kind of more powerful. So opening up their books, opening up, you know, what they have is something I think is pretty important. And again, with a cash value insurance or permanent insurance policy, if buyers have them, it's a loan to themselves. They're essentially paying themselves back as well through dividends, through performance of the underlying contract. It's a little complicated, but again, there's options there. So I think, again, taking a look at that is a good option. Other things are like IRAs, you know, of course, I'm sure you guys are aware, but you know, you can, for first-time home buyers, they can pull $10,000 out with avoiding penalties and things like that. So that's a natural kind of place to look as well. And then like brokerage accounts. This is something we deal with a lot. So clients, you know, obviously come to us and they want to save. They have money put away in the bank for something else, and they want to invest money because this might be longer term dollars. Well, let's take a look at, like, let's say someone was buying a home and they wanted to buy a second home. Let's just say, well, if the market's good for them to buy, but the stock market's down, right? Well, you don't want to lock in losses, or on the other hand, if the market's doing really, really well, well, you can have a line of credit where the brokerage account is the collateral. So again, it's interest only payments. It's really cheap. It's typically like around whatever the prime rate is. And it helps keep the cost down. But the beauty of it is, you know, the money can still play in the market, right? So again, the scenario where the market's down, well, gosh, you don't want to liquidate your portfolio and lock money in when it's, you know, when the returns are down. But at the same time, if the market's doing really well, you're like, well, gosh, I kind of want to keep the money there. And the good thing there too is, similar to a 401k, is, you know, most banks and most lenders aren't going to lend you the full amount. So for easy math, usually it's like a 65% of the value of the portfolio. So if it's $100,000 you have in a brokerage account with us, then we could give you a line of credit for $65,000. I think the reason why I kind of envision it, and I think we've helped some of our real estate clients do, is that they keep some cash together for them, because then it's like, what if you're buying a fixer upper, right? And maybe the client, and you work with Rick, and they think they need 20% down, but they can get away with 10. Well, why don't we use some of the cash that you're saving there, use a line of credit, you know, where you can still have the money invested, go in, fix up the property, do whatever you need to do, but use your own money for it. And then perhaps in a couple of years when rates come down or the value of the property goes up, you can refinance out, pay yourself back. We use dividends, we use performance, you know, so if the account does really well in the underlying brokerage account, we use some of the gains to pay yourself back. So it's like a really powerful tool, again, kind of getting your buyer to become their own bank.
And I do want to add on that, because I saw that a lot of people would forget about being able to get a line of credit against your own brokerage account. And it's actually a very easy process, and practically you're going to be approved, right? It's not like applying for a home equity line of credit or a mortgage loan. It's completely different. And what we would use for situations like this is say, get a line of credit against your own brokerage, use that for the down payment. Or if you have enough money, use it to buy the property in cash. Go out there, get a good deal, buy it in cash, and then come back to your trusted loan officer and do a cash recoupment loan. Okay, so now I'm going to look at that transaction in the eyes of a purchase, right? Because you use your own money. Yes, it was borrowed money, but it was your own money, so it can be done. And at the end of the day, you didn't have to liquidate your brokerage account, right? You didn't have any tax implications or losses. So it's almost like a short-term bridge loan, but it's, I gotta tell you, it's the most underused way of using money for down payment or buying a property in cash.
Yeah, and just to kind of, one really important point is it can't be like retirement dollars. So it couldn't be like IRAs or 401ks or anything like that. It has to be kind of it has to be a taxable, brokerage account. So, again, it's the importance of opening up the finances, with your buyers. And so I think the way I kind of see it is, or kind of ending the whole deal is just doing that, right? Thinking of, one thing we used to always like to say is like, we can't really say no up front. We have to figure other options out, and we'll exhaust every resource available to us. And I think, again, and I just picture myself buying, again, using the different examples of like, I pulled money from everywhere, and it wasn't everything I had, but it was certainly like a lot of different buckets. But I got into the house I needed to at the time, and it just was like a really kind of good case study in terms of like, of making that happen. And so, honestly, it's because I had like advisors, I had people that I asked questions to, that kind of helped me get through that. And I think it's important to have a team. It's important to have, I think we're all, four of us are really good at our jobs. I'm sure like you guys, right, are really good at your jobs. You kind of have your lane that you're really, really good at. I think it's really important to kind of have someone in each arena, especially as a realtor, because you guys are like quarterbacks, right? You guys work with lenders, you guys work with, escrow agents, you guys work with so many different types of people that I'm sure your clients come to you for everything. And that's a sign of a good agent. So, I guess the one thing sorry, go ahead.
Well, I wanted to add to everyone in the audience that this product specifically that they're talking about is incredible, because in the pandemic, how many of you guys were going, wow, this market is so crazy. These buyers are non-contingent, writing non-contingent offers. They're so confident they need financing, and then they were able to do all this stuff, right? The reason and the way they were able to succeed and be the first offer that was picked was because they were confident with their trusted advisors. They've had better consultations. They were able to tap into their stock portfolio and purchase as cash. And you can still do that today, because I know if you come and write your offers as cash offers, even though you're obtaining your own line of credit, guess what, guys? You're actually really a cash offer. It takes some time, 30 days maybe, or less, even faster, right?
Yeah, it's like 5 to 7 business days probably.
That is super fast. So in my situation, I have a mutual client with Rick. I was impressed with my client. He's like, yeah, my guaranteed rate and Rick Sanchez is the best. He was able to write non-contingent offers, and he was saying I can close in less than 30 days like everybody else. You can write and say I want to close in 14 days. Okay, if they have a good stock portfolio. But this is definitely underutilized. So I did have a couple of questions. I was wondering, in this product, do I have to transfer my portfolio to your brokerage account, or I can use my own Merrill Lynch or Ameritrade? How quickly is that pre-approval process? Is this considered a DU approval? Stuff like that. Maybe elaborate on some of those details.
Yeah, so to answer your question, you don't have to bring it to our firm. Most banks, most financial institutions, allow for that. I still would encourage people to come to us, because a lot of times, like I'll just say like Charles Schwab, for example, I know they might have minimums, and it might be only available through like their private client group or their private banking. Our minimum is for lines of credit, $25,000 is the minimum line. So that's roughly $40,000. So that's like kind of a nice minimum. So again, other places that I think might be 200 to 250,000 in, that has to be the value of the account before. So anyway, I would still encourage that, but maybe even just ask us, or that's the question to ask, is how much, what's the minimum line size and how much do we have to have, invested? And honestly, depending on the holdings, you can kind of get more than 65%, but that's like the lowest number. So I always go with that. And then,
As far as the loan, I would say that 95% of the lenders are okay with recouping the cash that you use from your line of credit, as long as that money came from the buyer's account. Okay, so as long as it came from the buyer and the person that's going to be on the mortgage loan, then it can be used. It's the same as having money saved up in a savings account for many years. Exact same thing.
Question, credit line, almost interest rates for credit.
It's based on the prime rate. So it's either prime plus a margin, or LIBOR plus a margin, whatever rate we end up using, or whatever lender we end up using.
but the payments in the interim, like Rick mentioned, it could be viewed as like a bridge loan. The payments on it are interest only. So, and there's no like balloon payment at the end. Typically it's like a 5-year term, interest only. So, and usually like, let's just say a buyer just paid the interest for 5 years. You can just redo the line of credit. And I know certain areas too, if the portfolio goes up or there's money added, you can obviously increase the line of credit size too. So it's not like obviously you have to pull credit and things like that, but it's certainly, a good way if someone's just kind of saving money and they want to put more money back into the account to thus increase the line size to, get more buying power. Certainly people can do that. It's just a new application.
It's, and correct me if I'm wrong, but it's the great way to let your money continue to grow, right? Don't take it out, cash out, buy the house. Keep it there, let it grow, right? And with that growth, you'll end up paying the interest to yourself, right? So it's the most underused product.
Really good arbitrage opportunity there. So if your portfolio is sitting there cooking, making 10% a year, right, and in the market, but the line of credit costs you 4.5%, you've got that great arbitrage opportunity where you're making more money than it's costing you. Obviously, all of that's subject to market conditions, right? Because the market doesn't just go up. But essentially, if you're looking at like a long-term performance metric of what your portfolio could be doing, it makes a lot of sense.
So quick recap, talk to your financial advisor, ask if they can do a line of credit for you guys or have your buyer talk to them. If the answer is no, reach out to Andre and Andrew, or reach out to them anyways and ask if whatever your advisor is offering, if it's a good deal, right? These guys are honest. They'll let you know, yes, it is a good deal. Continue with them. Sorry, you had a question.
Yeah, I have a question for you
Huh?
on this example.
Yeah.
What are your fees?
So good question. So the question is about the buy down program. And I'll email this to everyone. The buy down program, essentially you're prepaying the interest that you're going to not pay the first year and the second year, right? And that prepayment can be paid through the seller. It could be paid through a credit from an agent, or it could be paid through the lender. So interest is being paid, it's just not being paid right now, right? So what I've used with some of my buyers with the seller, instead of having them go and maybe reduce their listing price, I say, well, why don't you just prepay, buy them this program, so then the buyer can move forward, right? And that's how it's paid.
No, what I really meant is, you guys, how many points you guys charge and.
I see. So to be clear, for the buy down program, there's no fees. It's just a regular loan, right? So if you have a buyer that wants to apply for a loan, a 30-year fix, we could do as little as no points. And then right now, our average rate, I think, is like a 3.1% on a 30-year fix. So it's just a normal loan. This is just a strategy of how to have a lower rate the first year, the second year. That's it. Does that answer your question? Okay, so I think what we'll do, any more questions about?
Yes.
Yes.
Is that right that after the buy down the loan, the third year, the principal is increased. Hello,
So the principal
of the balance.
amount
Yeah.
is going to be the same throughout. What's lower is the amount of interest that you're paying on a monthly basis. That's why the monthly payment is lower. Now, I'll send an example out so you guys can see how the monthly payments break up the portion of principal and the portion of interest.
Thank you.
Is there any questions from the Zoom group? I said, someone, Rick, please share your phone number. So yes, we'll get it to you guys and I'll email out to everybody after the class.
Great, thank you. So now I'll
Any other
introduce-
questions from the back? Okay.
I'll introduce Colleen. So Colleen is a professional organizer. So when you think, maybe some of us have seen the shows out there where they'll go to your house and they'll tell you how to better organize your closet, your garage, your pantry, right? My thought here, again, is when you go to a listing opportunity and maybe that you could just tell that the seller is just overwhelmed about maybe moving, right? How to pack, where to put their stuff. The one, or the second thing is when you close a transaction, your buyer is happy. I know every time I've bought a house, they send me either a blanket, a gift basket, right? But when I met Colleen, I said, man, I wish someone would have gifted me her ideas, her services of how to move in, how to make that move in efficient for your family to work. Or when you're showing a house, how to better explain things of how they can make this house work for their family, right? And it's just a better way of helping people move into the house. So, Colleen.
Yeah, thank you so much, Rick. Really happy to be here today, everybody. In the world of organizing, there's so many different areas that you can go in, but for me, I specialize in people that are moving, buying, selling, moving. And especially if there's someone that has passed away, an elderly person that's passed away, and the adult children have to prepare the house for sale, and they're overwhelmed and they've got their own things going on in their life, and they're like, oh my God, what do I do here? I go into the house, I have a team of people that I work with, and it's people that, you know, donate things, that trash things, that pick up junk, that clean the house, that put things in storage. So we work with storage units, you know, in the area, whatever it is, we can research it for them and say, this is the best one for you to use. We basically take everything out of the house. We ask the family to just pick up the treasures, you know, the things that you value, that you want. And then we do all of the rest for you. And we just keep the family updated. Okay, today we're working on this, tomorrow we're working on that. Me personally, the people that I team with, I've worked with them for a long time. I don't charge for their services, so I don't mark up my fees and, you know, take part of their money. I completely allocate them out separately so that it's very affordable for everybody. But, you know, really, when you think about that, of what Rick was saying about the moving in and the moving out process, I've been hired by a lot of families where they just don't know how to navigate through their home, especially if there's 2 or 3 stories. And Rick and I were talking about this, we're kind of laughing because there's a lot of really young families that have children and they buy these big houses, you know, to get the view, or, you know, it sits over on a particular hill or something, but they don't realize when I come in the house with the dog and the baby and the toddler, you know, I need to be up there on that floor and I'm down here and I'm throwing everything here and my garage is a junk pile, you know. And so we look at how do you enter your house. This is just one of the things about the ease and flow that we're talking about, is how do you enter your house? What do you have to do? Where do you have to unload? Why is your stuff over here when it needs to be over there? So there's a lot of that we can do consultations for, and we don't even have to come into the house. We can be on Zoom looking through the house saying, these are my pain points, this is what's happening. And I've had so many mothers, young mothers, come to me and say, I don't know what I'm doing. And I think there's a lot of pressure here on the young community where they buy a house, they're either both working in and out of the house. All these different things are happening with kids, and they're more involved with their kids and technology and their creative self of what they do in their life but they forget to kind of pay attention to the house and what needs to happen in the house. And in the old world, we used to call it being domesticated. You know, you would look at everything that would happen in your house. But today, everything's moving so fast that people are just like, oh my God, they turn around and go, where did all this stuff come from? Where did I get all this stuff? And how do I get it out of here? Some people are so overwhelmed, they just won't do anything. They just freeze up and they don't do anything. And that's where we come in, because we can easily tell them, trust me, done this a million times, you're gonna make it through, just relax, there's tons of things we can do for you. We can make it affordable for you. We're gonna tell you in pieces what needs to be done so that they don't freak out. And a lot of people think, just like what they're talking about, the creative, you know, financing, there's a lot of things that are out there to help you get these things done. People just don't know it. And for you to have something like this in your toolbox, you know, I have access to a person that can pack up your house. They can unpack your house. They can tell you, you know, let me walk you through the house. And you guys as real estate agents, if the house isn't already staged, to give the, you know, possible buyer a vision of what, oh, this is what it's gonna look like when I move to this house. You can tell them, oh, you're entering in here. This would be the walkway or the good way for you to unload your things, and give them vision of what, you know, oh yeah, this is the reason why I should want this house. There's a lot of things that you can help them with, but having these kinds of things, you know, in the toolbox, using that creativity to say there's an answer for every single thing that's going on here. There's an answer for every single thing. And everything we own goes in pretty much 4 categories, right? It's treasures, which is grandpa's watch, you know, your photos, whatever. There's tools, which are the functional type things that you need to use to either mow your lawn, stir your pans and pots, whatever. There's toys, and toys are things that you enjoy using, but they're not something that you have to have to breathe and eat and live every day. And then there's trash. There's things that need to go out of the house that don't go out of the house. People don't get rid of it. And think about how often people are bringing things in, but they're not taking things out. And that's why it becomes so overwhelming at the end when they go to sell the house, or if they say, yeah, I want to buy a house, but then that means I got to deal with where I'm living now. I got to deal with all this stuff. And there's this hidden fear back there of I'm going to be so overwhelmed and I don't know what to do. We do some creative stuff too, where if somebody said, I can't afford your services, we say, well, wait till the house sells, pay us afterwards. Don't worry about it. Let's just get it done. So we have all these things available in every way possible. And just like what the guys were saying, you can call me and say, do you know anybody that can landscape before we, you know, there's always an answer to everything. And if we all work together, we can make it a really positive experience.
So I agree with that, right? So with you guys, and I'm just putting myself as a buyer, when my wife and I were buying a home. You know, obviously with real estate, there's the sales price, right? You want to get them, you want to sell their house for the highest amount. But sometimes in our professions, we get too stuck on the business side that we forget about the emotional part, right? So things like this will, in my humble opinion, will help the buyer move forward, will help the seller consider selling, right? Okay, let's just move the conversation forward, right? That was an obstacle. Okay, let's address it. Now let's just continue the conversation forward. And that's why I think she would be a great contact for you guys.
What's a typical fee for like a 3-bed, 2-bath, 1,600 square feet?
Well, there is no typical fee, and I'll tell you why, because some people don't own very many things, and some people only need us for a portion of what they're doing. And some people are, you know, have 5 pounds of stuff in a 3-pound house. And that means extra hours and extra time. So no house is typical. It all goes by, you know, the movers go by the hour of what they have to do. And it depends on, are we taking half of this and putting it into storage? Are we boxing up your whole house? Are you moving inside California or outside California? Do you need help with that? Do you have special pieces that are estate stuff, you know, where special people have to come in and pack it up? Special musical equipment where they don't want us to touch that, a piano, something like that. Every house is different, so I can't really give like a typical house price, but I'd have to go and look at the house and then I can let it out.
But you guys all serve San Gabriel Valley. in this territory.
Yeah.
Awesome. See any questions from you guys?
Right. About your service, are you an interior designer?
I am not, but
No,
I have
he's just
connections to
making
interior
you-
designers. I'm more of the
Think out.
functional,
Here's-
you know, worker that gets in and does the dirty work, boxing things up and cleaning things and that sort of thing. But we work with interior designers too,
You help declutter
absolutely.
or de-hoard.
Yeah, I have more of the not so glamorous work on board with me.
Do you have, I have a few questions maybe for, is it Andre?
Andre.
Andrew, that, I think it was
Oh,
Andrew.
Andrew, okay.
So, I don't know if you guys know, but the government has just passed a $80 million investment towards more auditors in the IRS. And so
Right.
with that, we as in terms of tax and making sure that you're reporting your income properly and really just, any tips for us on preventing an audit as a realtor perspective. And what maybe and I kind of want to tap into if you can share anything on section 179 of the tax code, which is regarding the purchase of a 6,000-pound vehicle, which is a full deduction.
Yeah.
So maybe share those two things.
Sure, yeah. So there's really nothing that you can do to ensure that you don't get an audit. The best thing you can do is just keep a very clean set of books. If you are audited, it's really important that you've created this sort of separation between your personal life and your business. So one of the biggest messes that you can create for yourself is going out and making business expenses on your personal credit cards and sort of marrying those two worlds together because they need to be distinct and different. You want to be able to hand the IRS a report that says, hey, this is the business operation, not, hey, this is the business operation. Oh, plus look at all these other books and records that I have to supplement that I've done through my personal life. So that's the number one thing you can do is just keep a really clear and concise set of books. Everybody has the right to pay not more than their fair share of taxes, right? And so using the tax code to your advantage is not going to get you in trouble. Setting up an S corporation for yourself is not going to get you in trouble. Taking deductions for business expenses is not going to get you in trouble. That's part of the tax code. That's why it's there. It's encouraged that you go out and be entrepreneurs and create business because that's what runs the economy and that's what generates more tax dollars downstream. So don't be afraid of, oh, should I take these clients to lunch and take a tax deduction for having paid for lunch? I mean, it's totally within your legal right to do that. As far as the 179 special deductions for vehicles over 6,000 pounds, if it's a vehicle that is not your personal vehicle, that if it's a business use vehicle and it weighs over 6,000 pounds, you can take a 179 deduction, which is a depreciation expense where you can take the entire expense of that vehicle within the year that you purchase it. Otherwise, if it's just a regular depreciation, you just depreciate it over 5 years like you would any other type of vehicle. But a 179 deduction is a really powerful tool. So if you have a vehicle that is a business use vehicle, not a personal vehicle that you sometimes use for business, right? The distinction there is 50% of the time. So if you use it more than 50% of the time for work is a business use, but you do have to consider the fact that you shouldn't take the entire deduction if it's a mixed use vehicle, right? Because that's something that could potentially get you in trouble. Yeah, so I hope that answers your question.
Well, you can say like I buy it in December and get 100% use for business because I only drive it to work that
Yeah.
that month. The following year, then you can change it to a 60/40 business use.
Well, if you take the 179 deduction in December, then you've depreciated the whole vehicle,
Yeah,
right?
wow.
Less the salvage cost. But if you buy it in December as just a regular vehicle, if you buy like a Toyota Camry, something that's not 179 eligible, then you're only taking 1/12 of the depreciation deduction. The next year you'll get a full year of deduction. Last year you'll get 11 months of deduction. So you'll still get the full 5 years if you buy a vehicle that can be depreciated over 5 years, but you have to prorate the first and last year.
Okay, sorry, one last question tax wise, and then we'll wrap it up, or if there's any other questions. Any other questions? I had a question regarding a seller who sells their home. Let's just say it's $1 million value. And they bought it for 500,000. Okay? So there's 500 in gains from a married couple. Or let's say it's an individual. Let's just say it's one person. They've improved their property over the years, and they've had selling expenses, and they have capital improvements. So let's say they've spent $100,000 worth of improvements towards roof and plumbing and upgrades. How is that treated? And they fill out that 593C form. And in terms of what will be kind of their rough tax liability on $1 million home, $500,000 purchase,
Sure.
$100,000 in capital improvements.
Single
Yeah.
tax pilot.
Seeing the tax.
So they'll get initially the $250,000 exemption, assuming they've been there over 2 years, right? So that's off the bat.
Yep.
They'll also be able to add capital improvements back to the cost basis of the property. So that $500,000 basis is $600,000. So that's the first thing that happens. So then they have a $250,000 exemption. So that gets them to $850,000, right? So they'll pay a tax of $150,000, capital gain tax on $150,000.
And in the course of the escrow / title or fees, commissions for the listing broker and selling broker, that's also a deduction.
Yeah, that further adds to basis. Yes.
Okay.
Yeah.
That $100,000 of improvements, let's say it was done 10 years ago, some of it was done 12 years ago. Is that all simply just hopefully they have the records, but let's just say they don't have the records. Are they able to just simply put that right that I have $100,000?
Yeah, as long as they actually made those expenses. I mean, the IRS has the right to come back and ask about that
Yeah.
if they should.
Yeah, the
choose to do
burden of
that.
proof. Yeah,
Yeah.
show it.
So yeah, you may at some point have to dig those records up. But I mean, there's also like a reasonable expectation of how much improvement a property has over its life expectancy. I mean, I don't foresee it. I've never seen anyone get audited for something like that. You're allowed to add all those capital improvements to your basis. Again, if the IRS wants to come verify, that's their right to do so, and you have to produce something, or they can disallow that. But it usually shouldn't be that hard to go back and find records of things if you put things on your credit card or whatever. So
Maybe, and I'll maybe ask Andre one last question on, I guess, in terms of finance, you're the money guy. So with the Inflationary Act that just recently passed and all the stimulus money that we've had from CARES Act in the last several years with the debt, we definitely are experiencing inflation. How do you forecast in the next 5 years, I guess, asset values, stock for that forecasting, or what do you feel I feel we're in a recession. They redefined a recession, but in terms of money and home prices, where do you see us in 5 years?
I'll say this, I'll talk, you guys, you'll get the most bang for your buck from Andrew, I'll say, because he's just a great mind for that. But I think, yeah, I mean, I think technically we are in a recession, right? There's all these technical terms, but one thing that I've read and kind of we listen to a bunch of stuff is that there hasn't been a recession where wages have been this high and unemployment's been this low. So although there are technical factors out there that would deem this a recession, I think those are two things. I think something unprecedented could happen where it's it could be the first recession ever where we've had wages and unemployment this low because it's never happened. So I think a lot of the people we listen to and kind of people we trust and lean on think that it could be a 2023 where the recession actually we might start feeling it. More directly as consumers. I shouldn't say feeling it because we've all felt it now, but we felt a lot of the inflation. But I think in terms of the actual recession where maybe jobs aren't as ample, they're not as available. So a lot of things are 2023. And depends on kind of what happens with the Fed and if they can get this soft landing done, which doesn't seem that probable, but I don't know how much you have to add, but
yeah, just to add to that, the Fed has done their job of raising interest rates, we're starting to see inflation roll over. It's showing signs, which the market has been responding for the past month. The first 6 months of this year was tragic. We started out the year with Omicron and the holiday Omicron that everybody got, and we thought that would disrupt the economy. And then Russia and Ukraine. So it's just been disaster after disaster for this year, causing markets to fall. Yeah. So, but nevertheless, the important thing to remember is that not all recessions are the same. If we tend to have PTSD when we think about 2008, and that recession was particularly horrific. Recessions happen, they're a normal part of the business cycle, but we've never seen the market ever go down and then not later come back to surpass its previous highs. It's just never happened before. There's no reason to expect that this particular economic environment that we're in would be any different. So yeah, things are challenging at the moment. Inflation is high. It's showing signs of coming back. Perhaps it won't be this year, perhaps the end of next year, we might see inflation head back to what's considered normal. But right now it's particularly out of balance. And it's, no one has a crystal ball. I can't tell you a date as to when things will recover. But if history is any kind of metric that we can use to kind of check the temperature of things, we know that at some point things are going to start to turn around. Interest rates will start to come back down. So there should be some sort of reprieve from us for us at some point.
All right, great.
I have a question with Calvin's question earlier. If a couple lives in the house, but only one spouse is on the title, do they both get the exclusion?
Yeah, if they're married filing jointly, then yes.
Okay,
Get the
they don't have to be on one spouse, the other spouse doesn't have to be on.
correct.
Okay, thank you.
All right, guys, I think that wraps things up. Please share with me your bio or description. I'll be happy to share it to the team so they can have it and your contact information or any attachments like marketing materials or flyers.
Great, of course.
So I'll share it with the team. Any other questions from the chat? I'm going to check here one last time before we end today. And we say, can she give an example of the last house she did and the amount to get an idea of the cost of your decluttering / consultation services?
I just finished a house, a 3-story house that was a husband and wife were retiring and moving outside of California. So we had to get all their stuff packed up. She elected to use a pod because the pod would be used to be moved out, but we also had a storage unit not too far from her home. So there was a lot of expenses for her there. As far as the cost would it cost me from start to finish, I was there for probably 3 weeks. It was about $1,500 for my services, and then the movers were separate. So the movers, I believe, had $800 in a day. Storage unit, was $300 a month, but I don't think she had the storage unit more than 30 days. And then the pod was the most. The pod, the company that she chose to move all of that, I think, was $7,000 to get that pod kept for a month and then moved to Tennessee, which is where she was going. So, it depends on what the need of the client is, how much you're keeping, how much you're moving, and how much you need help with. So that was a good $3,000 for all the combined services.
But for your services, I think it was a really good
my
price.
prices are pretty low. I charge $75 an hour, and then I also, depending on whether I'm doing the boxing up, it'll take a little bit longer. But I have a moving team that I bring them in; they're much faster and they're much better at it, and so we can keep the prices a little lower. And then,
So you don't declutter their bank account?
No, and we can get them receipts back too, because we have another team that takes stuff and donates it and drops off
Nice.
junk and all that, and they get receipts for that, so that those will come back for them in that year during the move. So
And
yeah.
her only responsibility was to take her treasures and everything else was done for her.
Yeah, her only responsibility was to tell us. And the funny part was she's a real estate agent. And she said, I'm staging the house myself. So there was a lot of moving parts to this particular thing because we had to highlight, okay, this couch I'm gonna use for staging, but I'm tossing it afterwards. So we had to color code everything in the house of what was staying, what was going in storage, and what was gonna be trashed afterwards. We had like 4 different colors of stickies on everything in the house. So we knew phase 1, we're gonna do this, phase 2, to get her to the point where she was, staging the house. That was really the hardest part. And she was very overwhelmed because she was a little bit older and there was a lot to do. And she was moving outside of California, not just, downsizing to a little different house. So, yeah, it was interesting. It was fun.
All right. Well, let's give them all a round of applause, guys. Thank you. We appreciate you, Fuller Baker Dynasty. We're very happy,
Thank you.
thankful to appreciate you sharing your wisdom and your services.
Thank you guys from those of you at home or at everything. That's it for today. You missed out on a great lunch from these guys and content was even better. So thank you all.
Thank you, everyone.
Thank you.
Thank you.
Thank you.
Thank you.
Thanks, guys.